What's going on, Apes the Ape Army? Welcome back to the channel. My name is Tyler, and to my surprise, Citadel did publish their 13F filing, and what is in there is absolutely insane. We have to go over it. They doubled down on their short position. They liquidated a lot of their long position, only with a small fraction of what they did have back in May. So they have a lot of exposure to the downside. We're going to talk about this and what I expect is their reasoning behind this. As we do know, Citadel is behind, or rumored to be behind, a lot of the fraud, manipulation, and corruption of AMC Stock. We're also going to go over just an overall update where we do currently sit on a technical basis. Guys, we're right at that 50-day moving average. We actually close 5 cents under that 50-day moving average, so it can go either way. There's a lot to go over from the gamma squeeze situation that is going on right now and likely to continue throughout the rest of the week. You guys are going to get a ton of value out of this video. Drop the like on the video if you want to see AMC stock hit 40 by the end of the week, which this gamma squeeze does suggest is very much possible and on the table. Comment down below, subscribe to the channel, hit that notification bell, and let's get straight into it, guys. First off, with the technical analysis, the 50-day moving average is at $35.69. We are currently at $35.59. So my bad, excuse me, 10 cents under this 50-day moving average. This has been a resistance level pretty much all day. We would go over this about 20-30 cents, come back down under this, and now we are just under this. So I really wanted to see us close over this 50-day moving average, but the fact that we are so close, this is minimal. This is minuscule compared to where we have been relative to the 50-day moving average. So we're definitely looking for a breakout throughout the rest of this week. We're actually going up right now in after hours, only down 0.25% as we do currently speak. So it looks very bullish if we can break out from this tomorrow or even Wednesday. We tend to have red days on Thursday and Friday, but we're going to talk about why I think that won't be the case this week because of how the option chain looks relative to, it hasn't looked this bullish in basically forever. And we're going to talk about that in just 1 second. Let's go over the volume, guys, because that's really all I'm watching is the technicals. As far as the 50-day, the 200-day moving averages, their support and resistance levels, as well as the volume. So let's go over the volume. 86.2 million volume to be more exact for the day. So definitely on the up and up, about 30 million more than we did see as far as yesterday. And we did see that huge price action today, up 6.63%. So looking very bullish. See, now we are right on our 50-day moving average, literally at $35.69, getting a little bit of a boost here in after hours, only down 0.14% as we do currently speak. Like I said, watch for the volume, watch for us to break out past this 50-day moving average, watch for potential downside about $33. I simply don't think that is the case, but keep in mind, not a financial advisor, not a financial planner, or your dad, so ultimately it's up to you to come to your own conclusions. But I do encourage you guys to take all of this information from all these different YouTube videos, Twitter posts, wherever you're getting your information from. Take it all in, figure out what you think is reasonable and what you should expect, and come to your own conclusions. That is the only thing that I've ever done watching YouTube videos or Twitter, and it has served me very well personally. So that's all from the technicals. Let's get into the Ortex data, guys. Current short interest percentage of free float. Keep in mind these numbers may be a little bit high, a little bit low. We really don't know, but this is the legal short interest as far as the best information we can provide to you guys. It's at 18.89%, categorized as extreme short interest. But really, once we get over 20%, that's where you're going to have a lot of eyes turning to AMC from news outlets, from basically everybody. They're going to say, hey, AMC is over 20% short interest again. They're in a predicament. I'll say that for a short squeeze nevertheless. Now, current shares that are sold short of 96.6 million. That is a very large amount relative to even the volume we did see today. That would be about 10 million additional shares that would have to be bought into the market if you do want to look at it like all of the volume on the day was straight buys going into the market. So you could kind of get a reference from that, what kind of price action you would get just off the legal short interest. But as we do know, there's a lot of naked short positions as well as synthetic short positions. So I do myself think the short interest is in between about 40 and 80%. 40% obviously on the low end, 80% on the higher end. But with all of the synthetic shares outstanding, the flow is way bigger than we think, then it could be even higher than that. Now, share utilization, I pretty much call this out in every single video, is at 92.53%, and actually popular to contrary belief, or contrary to popular belief, I said that backwards, you want to see the share utilization coming down as the short interest goes up, meaning more hedge funds and institutions or brokers, whoever has shares of AMC, are willing to lend them out. That is the only way the short interest will continue to go up. And I think it's a lot better to have a high short interest and a lower stock price a little bit, right? Apes aren't selling, so it can only go so low, but to have a higher short interest and a lower share utilization. And that is really where you're going to get this mother of all short squeeze effect that we know is coming. But this is a time game and nobody can tell you exactly when this is going to happen. But it is looking more bullish than it has been in a very long time, ever since this last gamma squeeze, June 1st through June 3rd. Now the free flow on loan, 22.02%, meaning that our short interest could go to about 22% within the next week or so. Not a wizard here, so I don't know how high it'll go, but that is if all shares out on loan were sold short into the marketplace. So you're looking at a high of about 22% short interest if we do get all these shares lent out into the market. So definitely looking very good. You want to see the free flow on loan going up. Don't pay too much attention to the return shares or borrowed shares. Pay attention to the price action and the volume, because these return shares and borrowed shares are only from the free flow on loan, not the estimated short interest percentage of free flow. So keep that information in mind. Let's get into the stock tracker data. I know I'm kind of rushing through this video because I went through a lot of this information earlier in the day and not too much has changed, but you guys need to hear this, especially when it does come down to this gamma squeeze effect and why I think we'll have a bullish week throughout the rest of the week and a strong bullish close to this week. It really comes down to the option chain, and that is very important for every single ape to understand what is going on, why this week is so much different than any other week we have seen in the past. So for in the money calls, you're looking at about 80,000. Out the money calls, you're looking at 274,880. So we're looking strong on both ends. Obviously, we can have a lot more calls running into the money once we do get to about $40 per share. Puts, you're seeing 248,900 that are out the money. Excuse me. Out the money, 48,000, or in the money, 48,504 puts. So you can see this go either way, but we're definitely way more leaned towards the bullish side. And we went over that in multiple videos. There's a lot of big options trades expiring this Friday that are quite simply running into the money as we do currently speak. As far as today is concerned, a lot of contracts ran into the money. So that's all I want to talk about here. Let's go back to the option chain before we get into Citadel's position, guys, because that is the main part of this video that I really want to highlight for you guys and why this week is so much different. Why is it so much different? If you guys can't tell me, I'm about to tell you. So throughout basically the last month or two, you've had a lot of open interest be super far out the money or pretty much at this $40 strike, whereas this week you're seeing most of the open interest at about $33 to the $35 strike, which we did go in the money. So the $35 contracts strikes are in the money as we do currently speak. The $33 strike at $5,600 for open interest, the $34 strike at almost $15,000 for open interest, and the $35 at $20,661 for open interest. So that is a lot of hedging. You're looking at 500,000 shares right here with the $5,600 in open interest. You're looking at 1.4 million with this $14,000 open interest, and you're looking at 2.06 million shares at this $35 strike that do need to be hedged by the market makers. That is probably why we did see such a strong move today. We are seeing a lot of bullish filings coming out from the hedge funds and institutions. The percentage of shares they own is definitely going up as well, so that's playing an influence too. But you're looking at a lot of open interest right at this $36 strike, which we're only 40 cents away from that as we do currently speak. And then you're seeing a 10,000 at the 37, almost 10,000 at the 38, almost 5,000 at the 39, and then at the 40, you're seeing 26,000. But point is here, guys, we had about 40,000 contracts that ran in the money today alone. So I don't think we're going under $35 because that is 4 million shares that would need to be hedged for. But we could, this suggests we could go to about $40 before we see a drop off in the gamma activity and the hedging that has to happen by the market makers. So that is why this week is way different than other weeks, because on Monday, today, the first week of trading or first day of trading of the week, we seen 40,000 calls run into the money. That has not happened in a very long time. So I think this is likely to continue on this rally. Now let's get into Citadel's position, guys. They did update this. So for their call position at $33.44, we see a lot of concentration, as you guys can see, at this $33 price. But they do have calls that do control About 6 million shares. So not too much has actually changed from that. It went down a little bit, but as we can see, there's a lot of filings right here, and for some reason they're not all together. But Citadel right here, they doubled on their put position. Obviously, $33.44 now controls 8.4 million shares. Guys, the last filing they had only controlled 4 million shares as far as their put position. So they have completely doubled on their put position. Now, as far as their share position, guys, obviously $33.45. They had 740,000 shares last filing. That was May 21st. Now they only have 136,003 shares. So they have took a lot of tendies off the table. Obviously, we know they have bought in at about $6, but they're severely weighed towards the put side. So they're obviously down a lot on their short positions still as we do currently speak. They have took a lot off the table as far as leaning to the bullish side. So they're definitely way more leaning to the bearish side. Obviously, like I said, doubling up on their short positions. They also do have a call position, but relatively speaking, they're way more lean towards the bearish side. Now, what can you expect from this? As we do know, Citadel controls one of the largest market makers, if not the largest market maker. I know Virtu, they processed more shares of AMC last quarter. I would imagine this quarter around, it's probably going to go to Citadel, and overall, Citadel is the largest market maker in the stock market. So I don't want to throw anything around directly. Nobody's trying to get sued here. But a lot of the suspicions that we have suspected, holding orders, doing all this other stuff, may actually start to come out a little bit more. We may see them start to short the stock even more. They're definitely thinking AMC is going to go down. The only controllable variable here is if we hold on to their shares. There's not too much they can actually do. Now, let's take a look. Briefly, we are seeing the institutional shares, the institutional owners at 32.56%. That has went up about 5% since these filings have started coming out. Just the video earlier today, there was an additional 3 million shares bought. The institutional ownership earlier in that video was only a flat 32%. So you're obviously seeing hedge funds, institutions are very bullish on AMC. We're going to go over a specific hedge fund that tripled up on their position and sold out almost all of their Tesla. And obviously everybody is pretty bullish from what I can tell and all the information I can give to you guys. So that is going to wrap up this video. Drop the like on the video, comment down below, subscribe to the channel, turn on that notification bell. Also, if you guys want to get totally free stock up to $70 worth in a broker that does not use payment for order flow, get your free stock in about 3 minutes time with no need to link a bank account or deposit a single dollar. It is by definition free money. Check that out, link down below in the description, and the name of that is Public. I personally use them and love their brokerage. So also there is a link down below for the buy and sellers. Get notified in real time every time a trade is bought or sold in stock, options, or crypto, whether it's a day trade, swing trade, or longer term investment. We do it all. Big time focus on longer term investing. You want to grow a small amount into a very large amount in due time, no matter what your age is. So if you guys want access to that, check that out. Get your free stock with the link for Public. But that is going to do it for this video. I will see you guys in the next one.